Hello, market enthusiasts. This is Matt with askSlim. Today, I am continuing with a new video from our askSlim InPlay series, which we recently launched. The objective of these technical analysis videos is to map out key levels for directional moves and translate them into clear if-then scenarios and define checkpoints for re-evaluating the bias. Today's lineup includes 12 symbols, 6 from my bullish watch list, and then 6 from my bearish watch list. In each video, I review the symbols covered previously to see whether the directional bias has changed, whether the key levels are still actively in play, or whether they remain in play but are stalled by shorter-term counter-trend momentum conditions. I also look to introduce 2 to 3 new symbols in each video. All right, let's get into the analysis. We will start with FedEx. I initially reviewed FedEx on 11/6, and today is December 4th, which is a follow-up review. With FedEx, as I mentioned, we reviewed it initially on 11/6, which was right around here, and as it is on our bullish watch list, and there's really no change in the overall analysis for FedEx. Its overall directional bias is still positive. We are looking for the intermediate fib projection zone to still be reached. So what I'm showing you here is a multiple time frame chart. And with our in-play analysis, what we do for each symbol is we want to define that directional bias, mark the projections and the key levels, determine when the move is active or pending, and specify what triggers the next swing if it is not active yet. And then we're going to highlight the reevaluation level or condition that would require updating the in-play map and projection. So as I stated, there's really no change in FedEx. It has moved up nicely over the past few weeks, and it's coming up near that intermediate fib projection zone. Anytime you get to these key zones, you have to watch for price reactions. So this is the zone that we are watching. It runs from about 281 to 289.50. Now this is a weekly chart, so we have a monthly, weekly, daily, 2-hour. I'm looking at directional moves that are lasting anywhere from a few weeks to several weeks, even months at a time. So that is the focus of FedEx. What would change the overall directional bias and require reevaluation of the in-play analysis would be a close below this intermediate minor 61.8 fib. So if we got a daily close below that, that would require reevaluation. It right now sits around 244.40. Okay, that's our look at FedEx. Next up is going to be the natural gas ETF. So we initially reviewed that on 11/6, currently going to review it again here on 12/4. It was on our bullish watch list. So let's plug UNG into our charts. All right, so with UNG, obviously it was in a downtrend for even a couple years here, but what we identified in the short term is there were some meaningful changes starting to happen, and you can see these high-low markers, and these high-low markers are indicating the weekly high lows, and you can see how we've traced out here higher highs for the most part over the last several weeks. Again, we initially reviewed this on 11/6, so we've seen a really nice move here in UNG over the course of the last 4 weeks, and it has reached both of our projection zones. So this one, for the most part, has been completely satisfied in terms of the projections, and it still overall is in directional bias. Short-term directional bias is positive, and on the weekly chart, you can see that the reversal scout is firmly positive, and our slim ribbon recently on the weekly chart, which is a less sensitive indicator, has gone neutral. So what this suggests is that on a pullback into support zones, watch for those near-term or short-term momentum indicators or confirmation indicators to turn back up, and then that would likely signal another move to the upside. So what are a few of those? Well, on the 2-hour chart, you'd look for both the slim ribbon and the reversal scout to turn positive. On the daily chart, we watch for our slim ribbon PO. It's a projection oscillator integrated into our slim ribbon momentum indicator. And so what we end up with is a way to measure when a dominant momentum trend becomes either overbought or oversold. And then within the confines of the overall dominant condition, you get a continuation signal. So there was a couple of these nice continuation signals. This one was great as it shot right up. The first one came into the slim ribbon here. Had a little head fake back down to the downside, but really did no technical damage.